Hello, my friends. Anna is here in Daily Juice. How are you guys doing? What a day, right? It's not a very good day to start Monday, but what can we do if our world is such? But we have to go on and we have to face it with hat on, right? We have to be prepared for any kind of life circumstances. So that is why today I wanted to chat with you about life insurance. Now, life insurance can be a good investment that you make in the future of your family. It's not something that you get for yourself. This is something I want you to understand. Hi, Mackenzie. Thanks for hopping on. Okay? So if you have a family or if you have dependent and loved ones who you want to take care of, hi, Andre. Thanks for hopping on. Then that's what you need to think about. Some of us who are actually about to have kids, this is a good topic to think about as well. Again, I repeat myself, and I will a couple more times during this session. Life insurance is not for you. Life insurance is for your family in case you're not here and can't provide for them. So I wanted to chat with you just about the ins and outs of life insurance so that you can understand why and how and where do you go to get it. Now, full disclosure, I don't sell life insurance. That's not my job, but I do frequently look at what clients have, actually all the time, and I'll tell you, two areas where everybody is underinsured is life insurance and disability. That's it. Those are the big ones. Hi, Dwayne. What are you talking about? What's cooking on the show today? We're talking about life insurance, my friend. I think you told me the other day that you didn't have as much, so this is your chance to learn a little bit more about it, and hopefully you can actually get some more. All right, so let's start by understanding, what's for dinner? I don't know yet. I'm still in the office, so I'll have to figure out. I think I have some fish, and I know, actually, I have fish and butternut squash, so I need to make that. But as soon as I'm done with the show, I'm going home to make dinner. You're welcome to come, my friend, but I think you're far away. So let's get on to the life insurance. All right, I want first start by discussing with you that there are different types of life insurance, and the best way to assess what kind of type do you actually need is to look at your own situation and say, all right, do I have a permanent need? That means, do I have a condition or do I have a certain situation that will never end? So therefore, there must be a need for life insurance forever, or usually for the rest of your life. Now, when you look at your situation and say, well, I only have a temporary need. A temporary need would be, let's say you have kids. You just started a family, or your kids are 5 or 10 years old. They're not going to be dependent on you forever, and that's how you look at the temporary need. Let's say you have a mortgage that you're trying to cover, right? And this is, again, think in the back of your mind, this is life insurance, and we'll talk about how to calculate amounts based on you not being here and you providing for your family. So if you're not here and they need to be provided, not with just food and shelter, but other needs, that's how we come up with that number. So just to review, two types. We have a permanent need. That means that we probably need to look at the permanent life insurance, or we have a temporary need. And that means we need to look at the term insurance. Now, most people have a temporary need. They might be lasting for 10, 15, 20, 25, or 30 years, right? That's the most typical term policy, but they're not forever, okay? So now there is definitely a cost difference when you get a temporary insurance, which is term policies, versus when you have a permanent, because permanent is supposed to last for the rest of your life, right? And a lot of times the permanent types of insurance policies also include some kind of like an investment component, so that also increases the cost. But the idea is the same. The portion of the insurance is always there because that's what you're going for first, okay? I'm not going to get into the sophisticated types of policies that exist there, really basic, okay? Now, let's say that we identified that we have a need, and it happened to be a temporary need. Maybe you guys have families and have young kids, and so most typical, maybe we need 20 years worth of term insurance, right? Just an example. I'm not suggesting that that's what you need to do because we need to look at it a little bit more closely in details. All right, so that's number one. At least we identified what direction we're going to go, right? Because if you're doing research online, most likely you're going to come across these kinds of terms, and so I want you to be familiar with them. Now, some of you who work for an employer, or you work for a company, a lot of times your employer provides a benefit of life insurance. Sometimes it's free, sometimes it's partially free, just depending on the amount. Like most typical one, I actually had a client today who came in for the first time, so we're looking at his benefits. He has a one-time salary. So if your salary is $100,000, then your employer pays for $100,000 worth of life insurance on your behalf. Now that's great, but the minute you leave that employer, the life insurance goes away. Okay, so that brings me to point number two is, do you go the route of getting private life insurance, which means it's the insurance that you keep with you wherever you go, or do you get one through your employer, or you rely solely on that? Now, for those of us who are business owners and independent contractors, hi Shannon, how are you? This is a topic right along your alley, talking about life insurance. Then your best option probably to get private insurance, okay? And another reason I like to go the route of private insurance, because when you're in a group setting, so think about this, if you work for a big company, like here in Silicon Valley, when you work for, let's say, Microsoft, Google, I have clients from those companies, Facebook, there's thousands of employees, right, that participate in this pool, and everybody is jumping in and says, okay, I need a little bit of coverage. But what happens is that some people are healthy, some people are not. Some people have certain diseases that prevent them from getting private insurance. So when you are in a group, it's like a pool, right? The cost is spread out amongst everybody. Now, luckily, we were talking about getting maybe a first 100,000 or maybe one times your salary for free. But if you go in at the employer level and trying to get more, most likely you will be also spread out in this pool. Now, sometimes they have you also go through medical underwriting, and they have you actually do history and physical, blood work, urine sample, so that they can assess you individually and provide you the policy. That's probably the best, because then you're the one who's going to be on the judgment floor, and that's how the insurance company will decide what kind of premium to give you, right? And that's probably the best most times, okay? But if you are in the situations where there are medical conditions that prevent you from getting favorable rates, or even prevent you from being insured, maybe going the group route is one of the options that are available to you. But I'm going to pretend that you guys are all healthy individuals, and we are looking at options of going the private route, okay? Because that would be something that I like, that because that's the policy you can carry with you forever, okay? Or for the remainder of the term. So if we're talking about 20-year term, that policy stays with you that long. All right, so now how do you determine how much do you need to carry, how much life insurance? Now, this is all needs to be set down and identified for each of you individually, but I'll give you some guidelines to think about it. I'm glad to hear, Dwayne, that you're healthy. Then that shouldn't be a problem for you to get life insurance. Underwriting shouldn't be an issue. So a lot of times it's when you have diseases, when you smoke, when you drink, those are the things that insurance companies look at and underwriters and say, yeah, you are a risk and we will insure you, but we're going to charge you more premium because you potentially may be collecting on the insurance policies, because you need to understand insurance companies are in the business to win, in the business to make money of us paying them premium. So therefore, they want to make sure they spread out the risk, right? Okay, so when we're calculating how much do we actually need, we look at our each individual situation. So first of all, the first question is, do you actually need life insurance? So for example, for you, Dwayne, so if you want me to use you as an example, I don't know exactly how many kids you have, but I think 3, maybe 4 kids. I'm not sure. But let's say you had a family and you had kids that needed to be taken care of. You had a mortgage. So you look at all of that and you think, okay, well, if you're not here and the amount of life insurance that we're trying to come up with, we need to figure out what would be a replacement number that will substitute your income, okay? 8 kids. All right, so we definitely need more. Okay, so the first one is we need to create a specific sum of money that will replace your income if you're not here. So it's going to be a pot of money that's going to pay income stream to your wife so she can take care of the kids. So that's number one, okay? And that's a little bit of subjective because we need to look at what your expenses are, what kind of income can your wife generate. So that's number one. Number two, do you want to provide, yes, you're busy, 8 kids. Do you want to provide college funding for all of those kids, right? Because a lot of parents do. That's number one. So you look, okay, well, do I want all of them to go to Stanford? I'm using as an example here in the Bay Area, that's 60 grand. Or do I want them to go per year, per kid, times 4 years? You can do the math. Or do I want them to get a scholarship? Or do I want them to join the military, right? Or do I want them to take out their own loans and I'll subsidize what I can? So there's a little bit of that. Has to be calculated as well. Or do you want them to go to a state school? It doesn't have to be a private $60,000 per year in today's dollars. It could be maybe half of that cost. And again, based on that, what's the total? So you kind of have these little pots. You have a pot of money that you need to provide the income to replace yours. Then you need to pot of money to pay for college education if that's the need. And then some of us think about, okay, well, I want to make sure I provide a place for my family to live. So if you have a mortgage, or if you own a home and you have a mortgage on it, that's probably something that you may want to pay off. You add up all those numbers and you come up with something very specific. Okay, let's say it's $1 million, $1.5 million. And that's how rationally you determine and calculate how much life insurance you actually need. Hi, Nastya, thanks for joining. So now, when you go online and you search, and Google is your friend, but sometimes you have to filter that information. Sometimes what insurance companies use is something called, it's like an income verification number, or like, so what they say is like you use your income and you say, okay, I need 10 times my income, or if I'm younger, then I need 20 times my income. So if I make $100,000 and it's say that there's number that's appropriate for my age is 10, so you multiply 100,000 by 10, that gets you the amount of insurance that you need. So there's a couple of different ways to approach how much or how you can calculate the amount. No, the question came up in the chat section is whether the life insurance proceeds are taxed. They are not. Life insurance proceeds are not taxed when they're received by your beneficiaries. So that's one advantage is that it's sometimes, and this is a discussion for a whole separate conversation, but when I talked about permanent life insurance, so permanent life insurance, a lot is used for wealth transfer and estate planning purposes. And that's where the wealth can be transferred in the form of life insurance, tax-free. Okay, but that's complicated. So I don't want you to worry about that. I need you to sort of understand and agree that you need to have just basic needs covered. You need to make sure your family has a place to live. They have a foot on their table, and if you want to send them to college, all of those kids, Dwayne, then we need to think about what do you want to provide for them, right? So that's the very basic calculation. Now, if you have questions and you want to chat about, you figured out what your amount needs to be and you want to run it by me, I'm happy. Just send me a note. Hi, Lori. Thanks for hopping on. Just send me a note and I'm happy to let you know what I think is appropriate. I also will share in the comments a resource. Again, mentioned I don't sell their insurance policies. That's just not my business model, but there's a company that we work with, and they're brokers. And they work with top-rated insurance companies. That's where Yuri and I got our insurance. So I love their service. I love how they treat our clients. And let's get a couple of quotes for you guys so you can compare. Hi, Rebecca. Good to have you guys. Awesome, awesome. Okay, so I think that's all. So take a look at what your employer provides. I'm pretty sure that you have some coverage that's already given to you. You just need to understand what it is. And then make an assessment. Sit down and figure out, okay, and this applies for both. So if you have a spouse that's part of your family, it works exactly the same. So you do an assessment on you. This is what will happen and what my spouse will need when I'm not here. And you do the same thing for your spouse. This is what my spouse will need, or I will need when my spouse is not here. So Dwayne, in your case, they need to have $10,000 per month. Okay, so if your kids are in age, and we need to look at their age range. So if they are 5-year-old to 10-year-old, so for how long do we need to provide $10,000 per month to them? So let's say if it's 10 years, I'm just going to try to use some numbers so I can do a quick calculation. So if we need 10,000 per month, that's 120,000 per year. And if I multiply 120,000 per year times 10, that's $1.2 million. So we need to have just $1.2 million in our calculation, overall calculation, allocated to create that pot of money so that it can pay $10,000 a month if you're not here. So you're already at $1.2 million to start with. And then you go back to what I was talking earlier is how much do we want to allocate for college, if anything? How much do we want to allocate for paying off the mortgage if you have a mortgage? And that's when you when you reach out to an insurance company or a brokerage company and say, I get a quote from you for whatever that amount. So if it's $1.2 million for 20 years. Does that make sense? If it doesn't, follow up with me and I'll break it down for you a little bit more. But that should be a start. Now, one other thing is that I like to do, but this gets a little bit more complicated. I'll try to simplify it. So let's say if we needed $1.2 million overall, just an example for Dwayne. You guys probably heard of a concept, CD laddering, and this is when you buy CDs in your savings accounts, right? And you buy one that's like has a maturity of 1 year, and then you have one that's 3 years, and then one that's 5 years. So you kind of create like a ladder so that you don't have all of your monies sort of tied into one big CD. And usually the longer the maturity, like the longer the CD has to go, like let's say the 5-year one, the more interest you get. So with life insurance, we can create the same layers, because if you think about it, generally you don't need to have $1.2 million, if we're using that as an example, for 20 years. You probably need to have $1.2 million for the next 15 years, because that's where the most critical period is. But then from year 15 to 20, because the kids will be older, right? Will be more self-sufficient. If we calculated a mortgage as part of that number will be lower. So it's like, so you actually layer these policies, okay? Now, for something like that, I want to kind of have a discussion with you, because it's a bit of a art than science here, trying to figure out what kind of layers we have. But if at the very minimum you understand that you've got to have some life insurance, because again, you guys know what happened yesterday, right? Very tragic situation, and those people had no idea. So this is why I actually thought about talking to you about life insurance today, because you just never know, okay? And there's some simple things that we can put in place. Again, this is not for you. This is for your family and your loved ones. That's all I've got for you today. I'm gonna go home, Dwayne. I know it is very sad. I am sad. So, but all we can do is provide love, and that's why we're here, okay? I love you guys. I really do enjoy coming on here. I'm gonna go home and try give some love to my husband, cook him dinner, so that he's happy. But please reach out to me and let me know what specific questions you have regarding life insurance, okay? Good to have you here. You guys stay safe, okay? And one of the things that I want you to remember is always tell the people that you love that you actually love them. Don't forget to do that, okay? Because it might be the last time that you actually have the opportunity to do that. I don't want to get all teary here, but it is kind of like that. If we look at our life, we don't know where something could happen to us. So I want to add on a positive note. It's Monday, so you guys have a great week, and I'm looking forward to receiving your questions. Okay? Take care. Thanks for tuning in. Bye.